We got the chart of silver. This is the daily chart. You can see how it takes the staircase up and then the elevator down. That is typical price action. I mean, it's a huge move, but this is what happens when we get into kind of a euphoric kind of phase in something where people just don't care what they pay anymore. They just want in. And that's kind of what we saw. We had a target here at 106. And then, of course, it blew all the way up to 121. And then it fell all the way back down to 72. So when we look at this chart, I believe it still may be under pressure for a few more bars. It might take a little bit more time for a lot of investors who are nervous to keep selling out, and it's going to keep some downward pressure. But I do think we're going to see this kind of work itself back up to the 100 mark, maybe even push up even higher before maybe it goes into a bigger correction.
Silver's daily chart highlights a classic example of euphoric price action, marked by a steady staircase, higher followed by a sharp elevator-style drop. During speculative phases, buyers rush in without regard for value, driving prices far beyond technical targets. In this case, silver surged past resistance near 106, peaking around 121 before collapsing back toward the low 70s. According to technical analysts like Chris Vermeulen, this type of volatility often leads to extended consolidation. While short-term pressure may persist as nervous investors exit positions, silver could gradually rebuild momentum and work back toward the 100 level before facing a broader corrective phase. Now, we present the clips from Chris Vermeulen's interview. Before we continue to discuss this, please subscribe to our channel and activate the bell icon for timely updates. Thank you, and enjoy the video.
We got the chart of silver. This is the daily chart. You can see how it takes the staircase up and then the elevator down. That is typical price action. I mean, it's a huge move, but this is what happens when we get into kind of a euphoric kind of phase in something where people just don't care what they pay anymore. They just want in. And that's kind of what we saw. We had a target here at 106. And then, of course, it blew all the way up to 121. And then it fell all the way back down to 72. So when we look at this chart, I believe it still may be under pressure for a few more bars. It might take a little bit more time for a lot of investors who are nervous to keep selling out, and it's going to keep some downward pressure. But I do think we're going to see this kind of work itself back up to the 100 mark, maybe even push up even higher before maybe it goes into a bigger correction. So that's what I'm trying to get a gauge on right now. The charts now have cleansed the air. We've definitely seen some damage done, and now we just need to see how this is going to unfold. And again, I think we're going to see some bargain hunters step in, and it's going to find support here. So I believe we could actually still see that. You know, bull markets are always trying to buck people off. The pullback in gold and silver, you could argue, is still just a buck. Like, we could go back to gold, and we've seen this before. When we came over here, this was earlier. This was in October of last year. We saw gold have the very similar move. It took off. It hit our 100% measured move right here, which is where we closed out a short-term position. And then it went into this euphoric kind of blow-off phase. And then, of course, it got hit very hard. And a lot of people thought that was the peak. They're like, okay, it is now reversed. But all it did was anybody who's late chasing it, it put them through this roller coaster ride. It restabilized and it came all the way up. We actually closed out our gold position here on the 28th because it hit our 100% measured move. Gold had the blow off top, just like silver. And now it's correcting again. So gold and silver really are doing kind of these. They're both the same. They have a big run up, then they shake everybody up and tries to scare them out. Then it has a run up and it tries to shake people out. It has a run up. And now the precious metal space is trying to shake things up. Obviously, it's a very big move. It looks like some damage has been done. But when we step back and look at the big picture, the stock market hasn't peaked yet. And I still believe we could see the gold and silver potentially base or even go higher going forward here. So that's where we're at. We're at this big consolidation. We just have to see how the metals are going to react. Are they going to stabilize? Are they going to build a foundation? I think this is just a crowded trade. A lot of people piled in very quickly. It was kind of headline. Everybody was like on a hair trigger to lock in profits, it felt like. And as soon as the selling kicked in, everybody just ejected. And there's a lot of people trading momentum there, meaning a lot of people will put in stops under each previous day or intraday lows. So when we start to see this sell-off, it just triggers all kinds of orders, forced orders, especially the margin calls. So to me, this is actually a pullback at this point, still within the trend, but the charts were pointing to this. So when you and I spoke last, I talked about how 106 was my measured Fibonacci target. Typically, once you hit that, if we can break through it, we're going to go into some parabolic emotional phase where it could blow up to 120, 130, 140. And that's pretty much exactly what happened. I was in Vancouver at the VRIC event, and it broke through 106 and it spiked to pretty much 120. And everybody kind of went ballistic. I think the energy in the air was pretty wild. But that's typical price action. When there is a mass kind of herd psychology play where a lot of people are piling into a sector because it's been hot for long enough that people are all aware of it, we tend to see these strong explosive moves, and they're fairly predictable. Like the charts paint a very clear picture of where momentum should take us, which is 106. But once you break through a Fibonacci target is, I call it, invisible ceiling. Once you break through this invisible ceiling, you kind of pop into no man's land, a bit of a bubble territory, right? And we've seen the same with gold. It's happened twice over the past year where you hit this target and then it pops and everybody gets excited. So that's what we've seen in silver. And the pullback, I mean, I was talking, I think we could see a 40 to 60% pullback in silver. We saw a 32% pullback from the high in one day, which is pretty wild. But that's not the type of pullback I'm actually looking for. I'm expecting we're still going to get a bigger pullback in metals. It's going to take several months to unfold because I think the equities market is very close to a peak here and it'll drag the markets down. But short-term wise, when we look at the charts, Elijah, the market is, the way silver moves is a little bit kind of like a meme stock, like GME and things like that, where everybody piles in, they drive the price to kind of short-term ludicrous kind of pricing. And of course, everybody piles in and then there's a mass exodus when they all leave. They all bail out very quickly. Now, silver is obviously a futures market. So futures and margin calls kick in very quickly, which is what I think happened on that day. There's a ton of margin calls, huge volume. Generally, a commodity doesn't move 32% in a day. So, as soon as you apply leverage to that, I think people with leveraged accounts, leveraged ETF trades on silver, who are trading futures on silver, there was just a lot of forced liquidation. And you could see it on the intraday chart. You could just see the volume picking up and the waterfall sell off, like on the 10-minute chart, just going off a cliff. So I think now we could get a bounce. There's a lot of selling pressure still. People are still in shock. They're trying to digest that move. But I do think we're going to see silver and gold get bought back up here, and potentially silver works its way back to up to 100, maybe even gets back to 110 here. So it's really going to come over the next couple of days. How is this sentiment going to stabilize? But I am still bullish. I do think it's going to get bought up and see as a bargain here for a lot of people.
Silver's daily chart reveals classic euphoric price behavior with a staircase-style advance followed by a sharp elevator-like sell-off. After reaching a Fibonacci target near 106, silver surged into a parabolic blow-off phase, peaking around 121 before collapsing to the low 70s. This kind of volatility reflects herd psychology, forced liquidation, and margin calls common in futures markets. According to technical analysis perspectives often shared by Chris Vermeulen, such moves typically cleanse excess speculation. While short-term pressure may persist, bargain hunters are beginning to step in. If sentiment stabilizes, silver could rebuild a base and gradually work back toward the 100 level before a larger correction unfolds. Let's get back to the interview.
I think time frames is very important. So I just moved back to the monthly chart of gold. And for example, gold peaked out back in 2011. It went into a bear market, traded sideways forever. 2019 is when I put on this particular physical metal position. This is when I piled in, bought lots of precious metals. I also bought some on a pullback in COVID of 2020. I bought some more. And so literally I scaled out like right up here, about 40% of my position. So there's huge gains. This is kind of the long buy and hold. I'm not holding. I do want to exit once something goes parabolic, like into this type of phase, because I don't want to go through 10 years or go through potentially like 14 years to break even again, right? So I want to catch these moves when a new bull market starts. So this was a long-term trade. I'm still in it. We might still see gold push back up, and hopefully I'll be able to trim or close the rest out at a higher price. And silver is very much the same. When we look at silver, it's got this big parabolic spike. And as you and I have talked about before, if we go way back in time, things that go straight up like to come straight back down, usually at least for half of the move. And so silver was the same. I closed out at 113 and change right up here. Now we need to let it try and figure itself out and see if it's going to quickly pop and get bought back up as an opportunity, maybe even go higher. But so these were long-term investments. Again, I purchased silver back in 2019. Now, silver is much more volatile. It ended up taking much more of a hit. I added I added a lot of silver on the 2020 dip, the COVID dip. And so we're up, hundreds of percent to the upside, but those are long-term plays. And now I want to, trim off because I don't want to hold through potentially a long time where metals might not go higher. A lot of people think metals are just getting started. I think they're kind of coming to an end for a while, and there'll be a different asset class to take advantage of. But as you mentioned, that's a long-term play. As a short-term play, we got into silver. We caught a nice 20% move and closed out a trade somewhere back over here as a short-term trade. We got in, hit two of our targets, closed it out, and then we did the same with gold. So we trade both of them. We got into a trade over here for gold. We closed it out right over here, up here. So I do provide both, right? I have the long-term buy and hold, and we avoid multi-year bear markets. And then I have short-term trades where we just get in, hit the targets, get out as more short-term kind of gains to kind of juice up the portfolio a little bit here and there. So it really is important for people to understand what time frame you're on. I'm a buy and hold when it comes to physical metals. It's just, I believe we're at a point now where I believe we might go a long time without actually huge gains. Usually people buy the rumor, sell the news, right? It's the same we see in the stock market. People buy into a stock, it goes up, you get really good earnings, and then the stock crashes. Precious metals are the same. People are buying into precious metals, expecting the world to fall apart, all kinds of bad stuff to happen. Then the bad things are probably going to happen, and it's already priced into the metals, right? It's always, most investors are behind the curve. They're buying, anticipating when the bad news comes, it's going to send gold through the roof. Well, gold and silver have already, to me, have almost kind of priced it in for a while. And so I want to step back from a long-term view and let it figure itself out. And we could see, gold and silver flatline and pull back for a very long time. It could be several years. We don't know. And I don't want to hold something long-term at this point as an active investor if it could go sideways for a long time when it has clear signs that it looks like it's peaking. In my opinion, for a short-term trader, I would kind of steer clear because we might just see metals drift sideways and up very slowly, but then get hit with more selling and go into a deeper correction. If you're a long-term investor, I'd give it some time. I mean, I think it's best to let the dust settle, see where things kind of peak out. I'm not a huge fan of moving into the space right now. I mean, I'm doing the exact opposite. I'm scaling out, right? So generally, it's not ideal to move. I don't want to move in when it's at a point where everything from my perspective is saying start locking in profits and protect your capital, because the charts are pointing to, this is the type of price action that happens usually before a big reversal.
Time frame selection is critical when analyzing gold and silver markets. On the monthly gold chart, long-term cycles reveal how metals can peak, enter prolonged bear markets, and trade sideways for years before new opportunities emerge. Strategic investors who accumulated physical metals around 2019 and during the 2020 COVID pullback captured substantial gains by scaling out during parabolic moves. Silver followed a similar but more volatile path, delivering outsized returns before sharp corrections. This approach highlights the importance of separating long-term buy and hold positions from short-term tactical trades. As charts show signs of peaking, capital preservation and profit protection become essential before potential multi-year consolidations. Share your thoughts on his analysis in the comment section below. If you find this video informative, please support us by turning on notifications to stay informed about our latest videos. See you in the following video. Thanks for watching.